the psychology here, I think, is really interesting, and I've talked about this before, but it's worth mentioning again, I think, is, look, people are reading about price falls, and so I think the world believes that there will be a drop of 5 to 10%, maybe more. In an environment like that, you're not going to pay market price for something, because you know that market price is not going to be the market price 6 months from now. So the only reason people will buy now, unless they really are desperately in love with the place that they've seen, but the only real reason most people will buy is if they think they're getting a bit of a bargain, if they think they're buying something below market. So, you know, if you're going to sell now, you've got to cut your price down to a level where it's 5 or 10% below what's perceived as market. Now, the problem with that is that, you know, today's bargain is tomorrow's market value. So, you know, you get a situation where you get all these 5% cuts, and some of them people sell, but then you need another round of 5% cuts, 5 or 10% cuts, to get the next round of buyers to come in. So that's why the market price is going to fall. And, you know, George Soros talks about how markets don't tend towards equilibrium. They tend towards, you know, excess in an upward direction, excess in a downwards direction. And he's afraid that prices will actually go below value. They'll go below what's justified by incomes and what's justified by, because of this trend of needing to see a bargain and, you know, people becoming forced sellers. So, I mean, yeah, I think the sort of natural price for houses in the UK is probably 30 to 35% off the high. But if the momentum really gets going and the forced sales really start happening, you know, prices could drop, you know, even more than that. It could drop 40 or 50%. That's possible.
You know, I came back to my house the day before yesterday. I obviously rent, and I came back to my house to see a big board outside my house saying "for sale by auction."
Oh dear. Where you're living?
Yeah. And it's being auctioned off at the end of the month. Now, my place is owned by Norwich Union, and Norwich Union announced on the bank holiday, the first day after the bank holiday at the end of August. So this is just after the credit crunch hit. And they own a lot of property around here, and they announced that they were liquidating their entire portfolio around here. And I speculated at the time that it was due either to them having to raise some cash to pay for insurance damage for all the floods that had gone on in the summer, or that they foresaw they were going to be hit by this credit crunch and needed to raise some cash. But, you know, they own millions of pounds worth of property, and that they were selling it was a big, you know, it was a significant moment. But anyway, so my place goes up for auction in a couple of weeks' time, and I presume my tenancy will just transfer to the new buyer. But they're auctioning off the whole house. I live on the ground floor, and upstairs from me is an old lady, a sitting tenant, so presumably she's on a cheap rent. And, you know, the person that's buying it has the potential to be buying a big family house in a nice street in a good catchment area for a good school in a nice borough of London. But they've got to wait 5, 10, 1, 20 years for the old lady upstairs to pass on before it's convertible into a nice family house. So it's going to be fascinating to see how much it goes for.
Well, I think you should go along. Maybe you should even bid, because these types of places, in a good market, people would say, fine, you know, why don't I buy it now? Eventually I have this wonderful asset in my hands. And while I'm waiting, the price will go up. But they can't say that anymore, because the price is clearly not going to go up over the next several months, maybe the next few years. So you may find there aren't that many people willing to bid on the place.
Well,
and you might find, because of that sitting tenant, and even yourself sitting,
with my reputation.
No, I didn't mean that. But, you know, in terms of they're uncertain how long people will stay. And, you know, the old lady, I guess she probably pays quite a low rent, doesn't she?
Yeah. She said, you know, it's an old, what do they call it, a protected tenancy.
Yeah. So, you know, people look at the cash that I mean, I would have thought that the property could easily be sold for a 30% or even more discount to market value, to today's market value.
Well, I guess they'll have a reserve, but I'm certainly going to go along and see what they're see what they're saying. The thing is, Mike,
how well do you know your neighbor?
the old lady upstairs.
Yeah.
I don't know her well at all. I know her well enough to talk to, but I mean, in terms
Well, I mean,
of her,
I would have thought. I mean, maybe she'd like to sweeten her retirement a little bit. Is that you could say to her, you're thinking of buying the house, and if you do buy it, would she consider moving out in return for some money? And if you can then go and resell the property for 10% below market value after having bought it for 30 or 35% below market value, you could pay her quite a lot of money for her agreement to move out.
yeah, I mean, I could go and ask her that, but I will say she's an old lady. She's a sitting tenant. She's housebound.
Yeah.
She's deaf, so she only hears what she wants to hear.
Well, I think the
They're often
government's
quite
deaf
difficult
as well.
people. Well, there we go. The difficult people to negotiate with. But I mean, I could certainly propose that. But even if I bought it for 30% below market value, I'd still need to take out a mortgage, which is problematic. I hear what you're saying, but it's. I would have done it 3 years ago, but it's a risky trade now. It's a really risky trade.
Well, yes, it's a risky trade, but because it's perceived as a risky trade, you're going to have fewer buyers competing. And I mean, I fear what's going to happen here is, in this case, this is very predictable in a way, the price will not be allowed to fall to a low value because Norwich Union will be there with some kind of a bid. They won't let it go for whatever. They'll be there propping the price. Either someone who's dressed like a Norwich Union banker, or someone who's acting on their behalf and doesn't look like a Norwich Union banker will probably be there bidding as well. So you probably find you won't get a bargain, but you never know. I mean, maybe Norwich Union has a problem, and the decision of selling this has actually gone into someone else's hands, and they won't be able to protect the price. But I mean, my gosh, if they've got a whole load of them on the market, I can promise you one thing. For sure, the price of property in your neighborhood is going to go down.